Be seated. We'll start the next panel discussion. Our next session is a panel discussion on can sound regulations mitigate cross-border spillovers from digital finance. Our esteemed panelists are Mr. P. Vasudevan, Executive Director, RBI, Mr. Vikas Bansal, WTM and Head of Amazon Pay India, Professor Aravind Sampath, Professor of Finance, Accounting and Control at IIM Kozhikode. The session will be moderated by Professor Rudra Sensarma of IIM Kozhikode. May I now request all panelists to come on the stage and take their seat, please.
Good afternoon. So this is a challenging session for the simple reason that this is the first post-lunch session. So, when I go to teach in a class after lunch, I say it's the graveyard shift. But this is a very, very important and very, very exciting session. So I'm sure we will be able to keep you awake. We are going to talk about exciting stuff like digital payments, peer-to-peer lending, cryptocurrency, central bank digital currency. So a lot of exciting things to discuss. So welcome to the very distinguished panelists. See, digital finance, according to me, is probably the most important development that has happened in finance in this technology-powered age that we live in. So let me just give the background what we will cover when we say digital finance. We'll cover a broad spectrum of things like digital payments, peer-to-peer lending, cryptocurrency, CBDC, so e-money. So all these things will get covered. Now I saw an estimate by McKinsey Global Institute who said that digital finance is going to increase GDP of emerging economies by 6%. And they put a figure of some $3.7 trillion. So that's the impact digital finance is expected to have on GDP and particularly emerging market economies. So very important area, a lot of obvious advantages because digital finance gives us a cashless, low cost, high speed mode of transfers. But other than the convenience, there is also risks. So because it is high speed, low cost flow of money, so particularly when it comes to cross-border spillovers, which is the theme of our conference, there are issues of very fast movement of capital that could have contagion effects, that could create volatility of capital flows. So we will discuss about what are the benefits and also challenges and how do we think about a regulatory framework for digital finance. So let me start with the regulation part. So as we know, digital finance does not know national boundaries. So do they pose threats to stability of domestic economies? So I'll start with Mr. Vasudevan. So my question to you, sir, is, do you think digital finance poses risks to financial stability, and how should we view that, and should we worry about it, or is that something that we are comfortable with?
Good afternoon, everyone. Thank you for letting me be on this panel. When the regulator is there, we will not let you sleep. Don't worry, irrespective of what session or what topic you are hearing, we will ensure that you are all wide awake and alert. And whether the digital finance may or may not know national boundaries, we know our national boundaries. And we will ensure that whoever is operating in our space and whoever wants to enter will play by the rules of the game. And there are different parameters when we look at the national boundary. Some other jurisdictions may have other reasons for letting innovation happen or digital finance flourish. But we have our reasons as well. We want to balance innovation with also a responsibility that needs to be also ensured. For example, when there are various players that are already there, if a new player comes in, he also has to play by the rules of the game, at least to a reasonable extent. It cannot be a free-for-all. And when you look at the responsibilities we in India are expected to have towards the common man, towards the stakeholders, from a regulatory perspective, we also look at basically consumer protection. We also look at the financial stability, the data being also safe and secure. So multiple responsibilities are enshrined upon us when we look at the various aspects of digital finance, and the new instruments and the new players who are coming in are also expected to play by these rules. If you are looking at, say, we never were having these phrases like, these acronyms like LSPs, lending service providers. We were also not very much clear about what they are supposed to do and how they are supposed to partner with the banks or non-banks. We have something called as a, in FLDG was one phrase earlier being used, now we have a different phrase being used for that. So if you look at who is taking the risk on the balance sheet and who is actually interacting with the customer, who is actually taking care of the front end and back end support, etc., there are multiple players who have come in. So what was a normal market has become more or less like in the payment space we have seen a slice and dice atmosphere, and each one is supposed to play the roles, and we are here to ensure that the framework is there and people are compliant with that framework. So you would have seen the digital lending guidelines that have been issued. Those were also followed earlier by wide consultations with the industry, and that also was necessitated because there were various experiences and experiments being undertaken by many players, so we had to have all those engagements. Now I feel we are in a very nice space, and people who are now active and involved in this space do also know what responsibilities are expected from them, and we are happy about that. So definitely they also now know the national boundaries, and probably we also know in what framework they have to function. Thank you.
Thank you, sir. So I think what I took away is RBI seems to be confident that of course this is an innovation, but then regulation is keeping up with the challenges. So on top of things, that's good to know. So let me come to the digital finance industry now. So I'll go to Vikas and ask his views about the growth of digital finance. So how do you see the growth of digital finance, and do you think it is substituting the traditional modes of finance? So how are you seeing it?
So digital finance, right, is nothing but kind of doing this digitally, and considering now that the world is now moving more and more to digital, I really feel that digital finance is here to stay. It's not that something that will slow down, it will accelerate as more and more customers, more and more consumers come to the digital fold, right, and digital economy. Now, there are certain really important benefits that digital finance brings to the table, right? First is obviously the access, because with access with now mobile phones, smartphones, and internet, that any part of the country you can access financial services, which was not possible. The cost of distributions is better or lower than what it was earlier, right? And then efficiency. So there are multiple such benefits that digital finance brings to the table, but obviously it also comes with risks. That unlike that, you have a risk of cybersecurity threats, and then those risks get multifold and manifold considering the scale that which it can, and it is growing. So but I think the trend is pretty positive, and what we see also, like from my point, the key, obviously payments we talk a lot about, which is digital payments, and the kind of evolution we are seeing in India is absolutely the crux of it. But in addition to this, which I think is also playing a really important role, is in point of sale financing. Point of sale financing is again a very important use case where it's at the moment of truth when I need to buy something and I'm worried about how I'm going to buy it and how I should buy it. And then for the financial institutions to be there plays a very important role kind of to grow and take this to the next level. Now, in terms of your question about would it replace traditional financial institutions, I don't think so. I think that we have to, it is going to complement, and that's the thing that's already playing out, is that there is a very close collaboration and partnerships between the traditional financial institutions and the fintechs. Like in our case, we absolutely everything we do is kind of powered through financial institutions. So I think it's complementary. I don't think it will ever replace it, and it will be, I think the financial institutions will continue to be the backbone of digital finance in my view.
So you are saying that they will coexist, the traditional forms and the digital form of finance?
Absolutely. Yeah, I think this would absolutely.
So on that note, and particularly you mentioned this point of payment financing. So these are of course innovations that only digital finance can allow. So I'll come to Kunal. What other kinds of segments do you think are growing within digital finance? How do you see the growth, and in particular, which segments are you optimistic about?
I think the decade that we saw, where we moved from a absolutely cash-driven society to kind of we have to acknowledge the role that the regulator played in terms of the innovation that was done, companies that were allowed to participate, and we saw this acceleration of digital payments. And today, when we look at India, it is significantly ahead to anybody else in the world when it comes to just the payment capabilities that we have built. And that opens up many sorts of opportunities on top of that. So one of the things that we talked about was, let's say, point of sale financing. But the thing about, let's say, credit on UPI, the opportunity on that is immense, because now suddenly you have millions and millions of merchants that are historically not participating, and you have like probably 350, 400 million customers already on UPI. And traditionally, like if you look at the cost of kind of getting customers on board on credit was limited. I think we are entering a time where as long as we do not do the obvious errors that kind of cause all sorts of pain for everybody, we just are in a mode where we are going to really accelerate. And I see 10 years from now, I have been now in payments for now over 14, 15 years. The word fintech did not exist before. And sir has also asked what does fintech mean also. Because the thing is that all of us existed in the ecosystem in some ways. And I think the acceleration that we see is unique. More and more opportunities, more and more product capabilities are being done, including what sir mentioned about LSP. I think the ability to kind of innovate on top of the existing things. And now the digital public infrastructure that exists right now, so there are so many more participants in the ecosystem that can actually get many people into the healthy mix of credit, healthy mix of responsible financing, and so on and so forth. And to Vikas's point about digital finance and thing, let's just understand that the medium has changed. Not too long ago, we used to go to the branch to withdraw money and deposit money. Then the ATM came inside the branch. Then the ATM came outside the branch. And now you can see ATMs at the mall also. It doesn't mean the mall has become a bank. The thing is that it's just the capabilities that are there, and there will be a role that each of the players will play.
So I think, you didn't use the term, but I think what you also hinted at is that it is helping financial inclusion. And particularly we know traditional institutions, they did a great job of opening bank accounts. But what I took from you is digital finance is also allowing the next level of inclusion, which is getting the credit going and enabling payments, point of sale financing, etc. So now let me move to another domain that is cryptocurrency. So I'll come to Professor Aravind, because I know you have some interesting insights to share about cryptos. We all have a fair idea of what cryptos are, but when it comes to the investors who are investing in cryptos, how do you see them? So is their behavior any different from the investor behavior in other financial assets, or are they wired differently?
It's a pretty interesting question, Professor Rudra. If you look at the traditional asset classes, I can value an equity. I can always say that there are 3-4 ways to value an equity. I can look at a company's cash flows and say, okay, fine, I project the cash flow so much, I think this is the risk and I think this is the value. And then you do your trading. You go to debt, there's a similar way to do. Derivatives, very similar. You come to this new age postmodern asset class called a cryptocurrency. I joked in my students in class saying there are 7 billion people, probably 70 people understand how cryptocurrencies are valued. And I tell them I'm not one, right? But the point is, what interests me more is, it's not just the nature of the asset. You look at the trading rules. The asset is available for trade 24/7. You want to trade on Sunday night, 8:30 p.m., you can trade. There's no trading halt. You look at the market structures, right? Every other asset class, either asset, you have a trading break, you have an auction mechanism, you have different ways in which the orders are executed. And here we have something which is, many people don't understand how the value is driven. Many people can trade anytime they want, and they can sit anywhere in the world and they can trade. and they aren't governed by a local regulator. So my interest, I mean, I have a student here with me, Karthik, who works on his PhD dissertation. Our interest was more about, okay, do we think we have established evidence in other asset classes on how, for example, somebody is an informed trader, how do I mask my information so that I maximize my outcome? Do these people behave the same way in an asset like cryptocurrencies? And surprisingly, I mean, we are just not even scratching the surface. We are scratching of the surface in cryptocurrency research. And we find that the behavior of investors are not that different. When you look at an asset like cryptocurrency, I might not understand how the value is driven. But if I think I have more information than, say, somebody else, my trading mechanism is exactly the same as I would do an equity. So that's a fascinating insight to look at. And like I said, we're just scratching the surface. And I think the exciting stuff about crypto research is more on the behavioral angle rather than how to value a crypto. I mean, at least that's how I would look at it.
That's very interesting, Professor Aravind, but there is a regulator we know of who wants to ban cryptocurrencies. So I would come to Mr. Vasudevan on that note that RBI wanted to ban cryptocurrencies, but then I think the Supreme Court had an order in 2020 reversing that. So what is your view on cryptocurrencies? Should they be banned or should they be regulated?
Take your mic. I'm very glad that the question has come back to me after the professor's comment, and you were mentioned that now we know more about cryptocurrencies. I do hope that everybody knows a bit about cryptocurrencies. Let me make a few points straight. The Supreme Court did not set aside the ban. If you actually remember, what we did in April 2018 was to only ring fence the entities that are regulated by us. We told the banks, the non-banking financial companies that please do not have any dealing with virtual currencies, nor do you provide any services, because at that time, if you are aware, even prior to that, couple of years before onwards, we have been warning the public, also cautioning them about the risks that are there if you start dealing with the cryptocurrencies. And it's something which not many people know about. So we did say that the institutions, before you deal with them, you have to exercise caution. So we said that you should not deal with them. The Supreme Court, if you have actually read the order, 180-page order, I have seen the entire order. And if you see actually, the Supreme Court has said that Reserve Bank has the powers to take preemptive action. Okay. And what we did was, according to us, preemptive, but the Supreme Court said that you actually should be tested by the degree of our doctrine of proportionality. If you feel that the institutions that are regulated by you, if they have been actually facing a loss, or if there have been some instances where it has caused some harm, then probably you could have some justification. And when the base instrument, the crypto, has not been declared unlawful by the government, then why do you want to do this? So that's how they said. They only set aside the order. And if you see the 180-page judgment, for most part of it, they are in favor of what has been done. In fact, they have even thought of giving more powers to RBI than we ourselves thought we had in many aspects. And if you still look at the stance we have been taking, that still remains the same. The cryptocurrencies are not to be called currencies. So crypto is a nice word. I don't know whether they are an asset class as well. There is no underlying on which you have a cash flow in to invest upon. The crypto is a code, and crypto can be as volatile as we have been seeing today and a couple of years as well. People want to put money in, it's their choice, but it's our duty to warn. And our governor in the recent couple of interactions has made it very clear that Reserve Bank's approach is consistent, continues to be consistent. It's a call that the government will have to take about the nature of the crypto, how you have to deal with them. And if you also have been seeing the discourses during the recent G20, we have been pushing this as an agenda where there should be a global consensus, because one of the aspects which you have as part of this panel is about the global spillover. So we are also very conscious of the fact that these assets or these maybe instruments or these codes may not see a national boundary. So we have to be very careful, and we have to build a national consensus, global consensus to which we are working. And if you already are also familiar with the papers that have been brought out by FSB, the BIS, one of the aspects of regulation could also be banning it. There are many other things that are there in the ecosystem which could be easily good for the public to have, follow, adopt, but need not be legal, need not be also officially allowed as well. So those are the things you will have to live with it. And the interactions with the crypto guys also tell us that now they have accepted a point that, sir, we are not currency, so we don't want to be anywhere around RBI. We are somewhere else. If you look at it as an instrument, maybe we want to be under some other regulatory fold. So things are changing. And honestly, I was just having a number, 23,000 cryptocurrencies. I don't know if all of them become legal and start playing around in the country, what will happen. And if you also see the number of currencies that are folded for whatever reason, and the bigger institutions that are folded again for whatever reason, and the institutions that are also backing the crypto also folded for whatever reason, we can't afford to have such big failures in our jurisdiction, so we have to be very, very careful. So probably we reiterate what has been mentioned in the earlier press releases. You can go and see those things are even valid as of now. I hope I have made myself clear, including on the Supreme Court judgment. Okay.
Yes, absolutely. Thank you for clarifying. Of course, I wanted to be provocative so that we get.
We enjoy being provoked and we enjoy being reiterative and repetitive. I love actually being provoked. You can ask any of these colleagues. We have a lot of interactions.
So then let me come back to the industry views. I'll come to Vikas. Continuing on cryptocurrency. Now, how do you see cryptocurrency, particularly the regulatory situation right now? Do you think there's a confusion or do you think there's clarity? How would you like to see cryptocurrency be treated in India?
No, I think Sir said that cryptocurrency, presents a lot of risk, right? Because it doesn't have boundaries. It is very volatile. We don't know what's the underlying asset. We know what the definition is. I think all those challenges are real. And it requires deep deliberation about how, but at the same time, I will also say the benefits are pretty compelling. They're very early stages, but the benefit of speed, cost, distributed ledger, I think there are some really benefits come with it, but what it requires is kind of a deliberation to say, how do you do that? And the way probably we were thinking is that it requires very close collaboration, with the regulator and the industry first to understand, right to your point about what is it, what's the underlying technologies and the associated risks. Then it also kind of engaging with the industry and saying, look, what's the bound and how do we really think about so engaging with the industry is also very important, right, to that point. And then to have a clear regulatory framework. So I think, in my view, the framework will evolve, but I think whatever framework it is, that it should be predictable and it should be consistent so that the players know, and obviously that new risk emerge, then we will adjust, and I'm sure regulator will accordingly adjust. So I think if we really solve those things to really understand the technology, engage with the industry, and then most importantly, Sir also touched on this, is the education and awareness, is that when you're really doing it, the customers or consumers should really know the risks. And then it is very, very important, right, in that framework to also talk about the customer education and awareness. So I think as long as, first of all, the benefits, the challenges are pretty clear and evident. And how do we regulate or how do we come up with the framework is probably following that process could really help in that direction. I would say it's very, very early days and something I think as an industry we will have to evolve over time.
Thank you for your views. Kunal, I have a question on CRED, but before that, would you like to share your views on cryptocurrency?
I think we have to understand that as a country where we are in an early journey of money, literacy around money, and understanding of risk per se. We are also a very young demographic where we probably watch content more than understand the quality of content that we consume. And I think from that lens, taking a view that will not cause disruption is the right view. And I think the regulation has been actually following that same principle. And on tenet level call, I think it's been consistent, and therefore, while we may say it's innovation, all of that, it will also look at suitability for the audience, suitability of customers, and so on and so forth. And I think we have to understand that as a country, we need to understand who can say it is a currency and not a currency. We should never confuse that part. And therefore, while it may look like, and I think the world has already seen the whole is moved to AI already from crypto in terms of the wave. So I think the point is that we just need to stay focused on how do we kind of take our country forward and really use the digital wave on all the things. And today, about convenience of money, like as a country, we have solved it completely.
Thank you. Let me move on from the crypto theme now. So I had a question about CRED. So how did you evolve this idea of using credit card payments and loyalty related to that as a business model? And follow-up question to that would be, how do you view the regulatory framework for digital businesses that we have currently? So tell us a little bit about the model and then the regulation.
I think I want to answer the second question first.
Sure.
The point is, none of us would have existed if we did not have the regulatory support and these capabilities and infrastructure that was created on which many of these businesses have built. So fundamentally, we are all products of all the innovation and all the work that has been put in for a decade plus, including the creation of NPCI and UPI and many other things that have come, including the latest innovation on CBDC. I think we are all beneficiaries and we exist because of that. So I think we'll only see that kind of evolve further. When it comes to CRED, the idea was actually simple. I'm personally a product of a bad loan. My family went through a severe financial crisis and we had to sell all of our assets to pay off a loan. I realized that while we punish for bad behavior, there was no reward for good behavior. And I think both needs to exist together for a society to kind of do well. And I think we realized that a credit card as a market, while it was booming quite a lot, but many customers were the first people in their entire family to even have an instrument like that. So we realized that if we reward people for doing good behavior, which is paying their bills on time, ensuring that they understand what are the underlying costs and other things that they could have for having any lapses in their promises. And that was the idea behind that. And we realized that it's a large enough market. My previous company, Freecharge, we saw the power of mobile payments and all of that. And we realized that while we are trawling for all of India, I think there's a segment that needed focus. And on top of that, we currently help banks kind of use our platform to cross-sell many of the products that they have. So the idea is fairly simple. It's just that we took a unique approach to address the customer need. And I think the sentiment that we could get and get customers to come to is that rewarding for good behavior was historically not the case. And we saw merchants who were keen to access these customers, were very happy to sponsor rewards. A Swiggy or a Zomato or a Cult, any of these companies are very keen to acquire some of these customers. So we use this motivation of merchants to incentivize customers to get themselves to acquire these customers, and the customers need to kind of create a reliable payment experience and use that and build on top of that. So CRED is a simple journey. It's just that we focused on a customer segment, and we are also, like recently into UPI, we've just become the top amongst the top 4 companies, and I think we are very bullish now on credit on UPI, RuPay, many of these initiatives that the regulator has launched, and I think we'll see many more, like I would say years or probably a decade of innovation that continues to be there.
Thank you for explaining that to us, because I think most of us know CRED for the quirky ads that we see on TV, but now we know more than that. So I'll come back to the regulation side, the regulation of fintech. So I'll come to Mr. Vasudevan. That initially there was a light touch approach to fintech regulation, but do you think that has gone wrong, or a tipping point has been crossed where now the regulation is getting tough? And I'm specifically talking about the case of the Paytm payments bank. And there's a lot of social media chatter that, is this hurting innovation and startup spirits in the economy? So how do you balance that innovation versus stability when it comes to fintech regulation? And any thoughts on the Paytm bank issue?
The fintech sector is still let to be on its own only. We have not tried to regulate them. If you would have been seeing the recent paper that we had released, we said that we will be happy to have a sectoral self-regulation happening in the fintech space. We have come out with a document and on which we are awaiting inputs as well from the ecosystem, wherein we have said that the sector could try to have among themselves regulate, like self-regulation, SRO, what we have said. So we will be happy if the inputs evolve and the sector, it takes care of itself. We want to be as much as possible hands off and hands away. Of course, we'll be monitoring very closely what's happening in the ecosystem, because as I said, one of the things we have put in there is what's a fintech. It's very difficult to define what's a fintech. I have been saying in many fora as well, when I talk to some people, they said that they are a fintech, but when I try to discuss more, they end up realizing that we are not a fintech, we are just a partner to somebody else. So that's how it's coming out to be. So we will be very happy if the sector evolves and tries to have an element of self-regulation. If you see even in the payment space, typically initially everything was left on their own. If you see the prepaid payment instruments, we came out with guidelines. There is nothing on payment aggregators per se. There are a set of informal or indirect regulations which were told the banks that you have if you have a payment aggregator having an account with you, these are the certain things you have to follow. Later, over a period of time, we saw that they are becoming quite important in the space, and the banks also were having difficulty knowing what's happening. So we came out with a set of regulatory guidelines and guidance for the payment aggregators who actually handle funds. So we have been very clear in what we want to do. We didn't want to touch the payment gateways because they are only technology partners. They don't handle funds, or they are not expected to handle funds. If you are handling funds, typically we have been seeing in some of the companies that are quite comfortable in getting funds, that technology is their forte, handling funds is not, okay. And it is somebody else's funds, definitely you don't have so much of passion to handle those funds as well as we feel you should be. So in the case of payment aggregators, since customer funds were being passed on to the merchants through the PA route, we said that payment aggregators should come in under our direct regulatory fold. Over a period of time, we said online payment regulators and offline payment regulators, in between cross-border payment aggregators, all our payment aggregators should also be brought under the fold. So we have been having a very phased-in approach, even for the fintechs. If you see the account aggregators, what have we tried to do? We have said that these are the things you have to follow from a data consent perspective. Customer consent should be there. Who is the data owner? That should be very clear. How the data should be stored, should be used, is what we have mentioned in the account aggregator framework. Even for the P2P lending platforms, we have been very, very light in terms of our expectations from them. So to say that it is a space for which we are going to look heavily into regulation isn't correct. In fact, Kunal did mention about some good behavior not being rewarded, some bad behavior getting rewarded, etc. Some of the things probably we will be looking into closely, especially how does a credit score get formed. Like I always like to take this example. If I buy a product and then through a credit card, so CRED is there, so I'll say using a credit card, and I get a couple of mails or messages from the card issuer saying that would you want to convert that into an EMI. Now, if I convert that into an EMI, probably I may get into the credit score area. But if I have 5 or 6 such purchases and I have refused 6 EMI offers, will my credit score improve? It doesn't. If I am paying my loan ahead of time, does my credit score improve? So those are the things we want the other credit score evolving concepts to be molded to the Indian way of life. Even now, if you see 95, 96 crore debit cards, if the same idea had been launched on the debit card platform, imagine CRED, where will it be, or DEB, where it will be somewhere else. So we are trying to understand that whatever is our culture should be the way what these entities who are operating in our space should be living by. There is nothing as a harm to expect this. And when you say global spillovers, I am very keen to see that the other countries should be scared of us now. Because we are going to spill over into their terrain. Because we have established and we are very comfortable with the volumes, we are comfortable with the way in which we have handled some issues. And we have never tried to be swayed by some people come and tell us that I've implemented this in a couple of jurisdictions, I want to implement in India. Definitely not. You have to implement the way we want. And that's what we have done. And we will learn from our good examples and we will try to do on that. So even the fintech space, we are very happy to see them innovate, to see them participate in our ecosystem. Certain frameworks, certain rules about customer consent, data privacy, customer grievance handling, all those things are our expectations. Even if you see the digital lending guidance, simple thing we have said, give an annual percentage rate, APR, to the customer. Key fact statement should be given to the customer. The recent monetary policy, it has been extended to all sort of retail loans. Basic minimum things. So sector should be happy, we are away, but we are also around somewhere.
So good to know that you are encouraging innovation, but as you are saying, within the Indian context, there should be transparency, customer privacy, data consent. So these need to be respected, but innovation is welcome. Professor Aravind, I want to now talk about decentralized finance, which has a cute acronym DeFi. So can you explain to us what is this DeFi, and does it replace the traditional finance models, take out the middle person, so to say, and or is this just a passing fad that will go away, or is it creating value and delivering efficiency?
Yeah, very good question. I think it's very important to learn about this in today's world. So I look at DeFi as something that's not going to replace traditional finance. But I have a very contrarian view, maybe unpopular also. DeFi has been the traditional finance. You have money, I have a need, I take money from you, I use it, I pay it back. You are a person with cash, I am somebody who needs the cash, and we enter into a transaction. And this is how it used to be, at least when markets were centralized and we were living in our own rural spheres. But what has happened over a period of time is, which is a necessity, is things have been centralized. Now you have a third party, which is the entire banking system, whose job is to behave like a market maker who creates market for the financial services. That's what has been happening in the entirety of the modern history. Now suddenly we have the advent of tech, and I look at this in a way similar to how the subject I work in, microstructure, where you had your traditional code